Good morning, this is the latest market news. I am Uliana. Asian share markets rallied on Thursday after US stocks enjoyed their strongest session this year, when the Federal Reserve sounded upbeat on the economy and promised to be patient in removing policy stimulus. The jitters of the recent days also calmed a touch as Russia managed to stabilize its ruble, if only for now, and oil prices stopped plunging. As risk aversion ebbed, US bond yields rose and the dollar regained some lost ground. In Asia, Japan's Nikkei jumped 2.3%, while stocks in Australia climbed 1.0%. On Wall Street, the major averages ended the session near the best levels of the day. The Dow surged up 288.0 points or 1.7%, the Nasdaq soared 96.5 points or 2.1%, and the S&P 500 jumped 40.2 points or 2%. US crude oil ended higher for a second straight session on Wednesday, having touched an intraday high of near $59 a barrel after an official weekly oil report from the Energy Information Administration showed crude oil stockpiles in the US to have dropped, albeit less than expected. The rise in yields was enough to revive US dollar's bulls after a few days of caution, and the currency climbed to 118.50 yen from a low of 116.29 on Wednesday. The euro retreated to 1.2340 US dollars after being as high as 1.2515 at the one stage on Wednesday, while the US dollar index gained 1% for the day. The Australian dollar fell to 4.5-year low, declining to 0.8107 US dollars in early trades. Is the outlook brightening on the margins for Germany's economy after several months of managing expectations down? Yes, according to the consensus forecast for today's IFO survey data. Later, the US is in focus with updates on weekly jobless claims, followed by the initial estimate for economic activity in the services sector for December via Markets Purchasing Managers Index, US Services PMI 1445 GMT. Economists are expecting that today's December survey data for the services sector will post a modest rise. The increase will be welcome news for this index, which has been sliding since the summer. The consensus forecast sees the flash PMI services index rising to 57.3 for December versus 56.3 in the previous month. It was the latest market news provided by ICA FX. Goodbye.